Stocks closed mixed on Wall Street. The S&P 500 and the Nasdaq closed lower as the U.S. market remains on track to break a 9-week gaining streak. The 10-year Treasury yield approaches 4% and is higher after strong private payrolls figure. Stocks in the Asia-Pacific trade mixed, while the GIFT Nifty is suggesting a lower start for the Indian market. Brent crude corrects about 1% to a little under $78 a barrel on large inventory buildup in the United States, while concerns of low demand linger on. And Grasim announces a 4,000 crore rupee rights issue opening on the 17th of January. Dabur in its third quarter update guides for mid to high single-digit revenue growth, while Sobha reports its best ever quarter in Bengaluru, as well as delivering a 37% year-over-year growth in sales value. And power stocks are in focus as the CERC releases a draft paper on electricity generation tariffs to be applicable from the 1st of April 2024. The norms will be in effect for 5 years till 2029. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we're looking at this Friday morning. There's a lot to track and a lot to look at in terms of cues as well. But for the US market, once again, the handover has not been very good. You have the Nasdaq, which continues to correct after that big run that we saw last year. But on the back of that, actually, most Asian markets are not too bad. Some of them are definitely seeing cuts. So the Hang Seng is down around 0.2%, but it has recovered a fair deal. I mean, when I checked 10 minutes ago, it was down over 80 points. So there has been a recovery that's played out there. You have Kospi trading with a little bit of red as well. But barring that, most Asian markets have actually moved into the green. So the Taiwanese index now up around 18 points. You have Straits, Shanghai, all of those seeing a little bit in terms of gains as well. It's nothing too much to really speak about. What's holding up well today is Japan. So the Nikkei markets up around 173 points. But remember, this is only the second trading day for the Nikkei markets in all of this week. So most of them actually still on track to post a negative week. That is for Asia. The GIFT Nifty will come up for you, and it is indicating that after that solid session we saw yesterday, we could open very flat, just around 10 points lower is where we're at as far as the implied open for our own markets goes. That's what's happening in Asia. Let's also talk about the US, because like I was pointing out, we ended quite mixed. So the Dow closed at the flat line, just some minor gains of 10 points. Like you can see, the S&P 500 was down around 16 points. But once again, the bulk of the selling came through in the tech index. So the Nasdaq was down over 80 points. And you've seen a loss come through in this index for the 5th straight day as well. This is actually the longest losing streak that we've seen on the Nasdaq ever since October of 2023. CNBC's Kate Rooney is now with us to bring us a wrap of all of the action that really played out on Wall Street. Kate.
U.S. markets were mixed in Thursday trading across the major indexes, and investors tried to keep the year-end rally going. The Dow added 10, the S&P 500 lost 16, and the tech-heavy Nasdaq was down 82. The jobs market closed out 2023 on a high note. Hiring in the private sector rose faster than expected in December, with payrolls rising by 164,000 for the month. That's according to payroll processing firm ADP. Rebounds in the leisure and hospitality sectors led the way to both job creation and pay increases. Construction and the financial activity sector also saw gains. However, categories such as manufacturing and information services were down on the month. Peloton announced a partnership with TikTok on Thursday to create content from the fitness company's instructors on the social media platform. The partnership will also feature collaborations with TikTok creators. This is part of Peloton's effort to rebrand itself as a fitness company for all, to bring in more customers who may have not been able to afford their equipment but could be interested in their subscription content. That's what's happening here in the U.S. Back to you in Mumbai.
All right, Kate, thanks a lot for getting us all of that action from the U.S. markets. In fact, let's also bring you some opinion. This comes in from experts on how to really approach the U.S. markets in 2024 and what we can expect from the Federal Reserve in the year to come. Listen in.
We can't help but think a good idea to be conservative in here moving into this year, in the sense that we do expect things are getting better. We're moving towards a normalization, stabilization in interest rates. And with that, the thought is still we've got plenty of volatility out there in terms of uncertainty in geopolitical risk that could actually affect food and energy supply chains in a part of the world that's important. And so a lot of thought there.
The economic numbers are pretty strong. A year ago, we had the vast majority of economists calling for a recession. And I think all of us feel that the markets have stayed in balance, both the equity and debt markets. The economy has stayed strong. Labor has stayed strong. So it truly has been a good year for the economy. And I think the Fed will be cautious. I think the Fed will be patient. It would take something, I think, that we don't see right now to see rate cuts in the first half of this year. I think the second half is possible.
Okay, that is the word coming in on how the Fed could really move in 2024, and that's what we're looking at globally. But let's now talk about our own markets, all of the news, the individual news that has come through in stocks as well. So for that, we have our research team here with the trade setup. Vivek, Hormaz are both with me right now. Guys, a very good morning to both of you. Vivek, let me come to you first. Handover has been a little bit weak once again. Looks like it is going to be our first losing week of the year.
Well, absolutely right. So to end 2023, you actually saw the US market saw 9 weeks of straight gains. And the first week of 2024, we looked set to snap that. So yesterday, like you mentioned, all the US markets ended in the red, and the Nasdaq continues to bear the brunt of the selling pressure. Now, despite the fact that there were so many worries as far as the Red Sea is concerned, crude oil prices yesterday continued to fall and continued to cool off further on the back of increased inventories as far as the US crude oil market was concerned. But coming to the Indian markets yesterday, remember, we had a very similar set of cues, overnight cues, even yesterday were quite muted. But despite that, Nifty actually saw a gap up start and continued to hold on to the gains. So Indian markets yesterday managed to recoup all of the day before yesterday's losses. And in fact, one of the sectors that was relatively underperforming, which was the banking pack, led the recovery yesterday. The other pack that was in focus, that we discussed all through yesterday was the realty pack. It'll be interesting to see whether there is any follow-up buying over there as well. Mid-cap index, record highs. Remember, 47,000 mark has been crossed as far as the mid-cap index is concerned. OMCs, however, yesterday dragged. There was a CLSA downgrade that came in on all three of the OMCs. So that'll be one sector that we need to continue to wait and watch out for. Key cues to watch out for today, the entire power sector will be in focus. The draft tariff regulation norms for the period of 2025 to 2029 has come in. So, there have been slight tweaks, but largely in line with what the analysts were anticipating. Overall, Asian markets, GIFT Nifty indicating a soft start for our own markets.
Okay, Vivek, thanks a lot for getting us all of those cues. So a soft start, but let's also talk about the individual stocks that could be in focus today. Hormaz, Vivek was just pointing out that, the power pack will definitely be interesting to watch, but take us through everything else that came through.
Well, aside of the power pack, there is a lot of powerful stocks that would be in focus as well today. I'll start off with Dabur with this business update where it is expecting a mid to high single-digit revenue growth in the December quarter. And they are saying that while sequential improvement has been seen in demand trends, but the rural growth continues to lag the urban market. So that is something we need to keep an eye out for. The Sobha was possibly the stock of the day yesterday. The entire realty packet came out with its business updates last night, and it said that total sales value were up 37% from last year, and average price realizations crossed the 11,000 rupees per square foot mark, was up 21% as well. RBL Bank, the advances were up 20% in Q3, deposits were up 13% year on year. Other stocks that will react to their business updates include L&T Finance, J&K Bank, Utkarsh Small Finance Bank, and EASF Small Finance Bank. Grasim has approved a 4,000 crore rupee rights issue. They'll be issuing 2.2 crore shares, and the entitlement ratio is 6 rights shares for every 179 shares held in the company. The rights issue will open on the 17th and close on the 29th of January. PFC has raised its FY24 market borrowing program to 1.05 lakh crores from 80,000 crore rupees earlier. And lastly, Lupin, which has received a tentative US FDA approval for its drugs that are used in patients with type 2 diabetes mellitus, and these drugs had an annual sales of $5 million in the US and will be manufactured at their Pithampur facility. Back to you.
Okay, Hormaz, thanks a lot for running us through that entire list of stocks. Let's also talk about all of the cues from the futures and options space. Mangalam is here with that. Mangalam, yesterday was solid.
It was a solid day yesterday. In fact, after a couple of days of weakness that we saw in our markets, or maybe pause for breath, we saw the markets bounce back yet again. The Nifty Bank and the mid-cap index, all of them doing extremely well. The mid-cap index was up almost 2% in yesterday's session. What was interesting is where there were heavyweights which were contributing to the upside on the Nifty. We had decent contribution coming in from both Infosys as well as HDFC Bank. The banking pack was slightly off, and Infosys also ended about 1.5% higher. The FIs, they bought in the cash markets, and that's the nature of the stocks that did well as well. 1,500 crore worth purchase, and the India VIX at the same time closed lower by around 5.5% as well. So that's a good sign. You would like that, the markets going up and the India VIX going down. Earlier when the markets were going up, the India VIX was going up. There was signs of caution right now. What was also interesting is that after 5 days of decline over the Nifty spot, the futures premium did see a bit of an inch up higher from 91 to 83 points, and then yesterday went up to 127 points, telling you that there was some purchase, some short covering in index futures itself. The FIs bought 122 crores. Importantly, the FIs are now 66% longs, as they have been from the start of the series. A mild correction out there is what we've seen. The Nifty Bank is holding above 48,000, so we'll keep an eye out on that. Record high on Nifty Bank is 48,636. That will be an important level. And for the Nifty, now that the bounce has happened from 21,500 to, importantly, watch out for 21,850 as well. From the stocks side, 11 stocks are in F&O ban, so watch out for the new entrants in the F&O ban itself.
Okay, Mangalam, thanks. We will watch for all of these important cues. But with that, it is time for a break on the show. On the other side, like we told you, the Central Electricity Regulation Commission, the CERC, has released a draft paper on electricity generation tariff. We're going to bring you all of the details in just a bit. Welcome back. You're still tuned into Power Breakfast. Now, like we were telling you, the whole power sector is going to be in focus today because the power regulator, CERC, has released draft electricity generation tariff norms, which will be applicable for 5 years. This is from the 1st of April of this year. So Vivek is here with more details on this. Vivek, take us through, all of the draft norms.
Well, absolutely right. Like you mentioned, CERC has issued draft regulations. Now, this is for a new tariff period from FY25 to FY29. Minor tweaks have been made, but largely this removes a major overhang as far as the entire power sector was concerned. No major changes have been made, and some of the worries that the analyst community have, none of them have fructified. So it's largely positive for the power sector overall. The first stock on our radar, NTPC, now we're talking about the thermal power plants. ROE on regulated projects have been retained at 15.5% for thermal projects. Now, along with that, the incentive opportunity has been raised. Thermal power plants generating units over 85% PLF in peak periods get 0.75 paise per unit incentive versus a slightly lower incentive earlier. Along with that, O&M escalation clauses have been revised higher to 6% from 4% earlier. On the back of that, LRI expects a 3 to 4 upside in NTPC's FY24 to FY26 EPS estimates. On the other hand, power grid slightly negative. While older projects, there has been no tinkering as far as the ROE is concerned. Going forward, post-April 2024, any transmission projects that do get that come on stream, the ROE has been reduced by 50 basis points to 15%. LRI, however, expects this to have a limited impact on, the earnings of power grid. Now, watch out for, hydropower companies like NHPC and SJVN. ROE of 16.5% retained for existing projects, revised higher by 50 basis points to 17% for new projects. And lastly, watch out for NLC India, a strong positive over here as well. The TPS2 expansion plant of the company, the benchmark has been brought to 50% from the expectation of 80% earlier. So on the back of that, given this particular benchmark, the plant availability factor benchmark coming down, expect significantly higher earnings for NLC India as well.
Okay, Vivek, thanks a lot for getting us all of these important draft norms that have been put out by the CERC. In fact, today we're also going to be speaking with Harshvardhan Dole of IIFL. He's the power and energy analyst at IIFL at 9 a.m. to really understand what this means for the power sector and some of the individual stocks as well. So do stay tuned for that conversation. But with that, it is time for a short break. On the other side, we're tracking all of the cues from the commodity markets. Manisha will be with us on the other side. Welcome back to Power Breakfast. Let's bring you some important updates from the global front now, and this is from the Red Sea. Iran-backed Houthi militants detonated an unmanned vessel despite a warning from the US and its allies, though the attack did not damage any ships. Now, as concerns really persist, India's External Affairs Minister has also stated that they are very closely monitoring the situation unfolding in the Red Sea area. Indian Navy ships are also heavily patrolling the region and ensuring the safety of Indian flagged ships. The MEA spokesperson, Randhir Jaiswal, has also clarified that India is not a part of any multilateral initiative or project in the area. So that is the latest with respect to what's going on in the Red Sea. But Manisha joins us now with, what this has meant for all of the commodities. Manisha, we're still pretty much at that $78 barrel mark for crude.
Yeah, the reason for that is, and even as we are looking at supply disruptions in the Middle East now, especially with the Israel-Hamas war spilling over into Lebanon, Red Sea tensions are keeping the premiums on. There's an oil output halted at Syria as well. But the markets are looking at a very big buildup in sense of inventories in the U.S. when it comes to gas and distillate. When you look at the gasoline stocks that have risen in U.S., it's the highest week-on-week rise in more than 30 years. So that is the kind of supplies and inventories we are dealing with in the international markets, is the reason that $80 a barrel still continues to be a resistance right now. But all of these markets will watch out for the U.S. non-farm payroll data. Well, markets are looking for 170,000 number of an increase in non-farm payrolls. So if you get that number, then we are on, a target right on for an interest rate cut in the month of March. Anything less or more than that, the street will, of course, have a relook at all of these factors. But apart from that, the U.S. dollar also has rebounded. That is trading above 102 right now. And that also seems to be putting some pressure, whether it's on crude and gold, and keeping the prices in check here.
Okay, that is the latest coming on the commodities pack. Manisha, thanks a lot for bringing us all of those details in terms of the action there. But with that, I also want to bring you some updates on the Israel-Hamas war now. U.S. Secretary of State Anthony Blinken heads to Israel for the fourth time since that war first erupted in October, amid fears that the conflict in Gaza could spill over to other regions as well. Meanwhile, Israeli Defense Minister has also outlined Israel's plans for the next phase of its assault on the Gaza Strip. He said operations would include raids, demolishing tunnels, air and ground strikes, and special forces operations as well. Now, several Hezbollah members have also been killed in Israeli strikes on the southern Lebanon as cross-border fighting escalates since the start of the war. At least 9 members of the group were killed in separate attacks on Wednesday. So that is an important update coming in from the conflict in West Asia. But with that, we do have to wind down on this edition of Power Breakfast. Thank you all for tuning in. We have Bazaar Morning Call on the other side to take you through all of the action.